Hi everyone, it's Anthony from MB+M and I'm here with Vince. We've both had the pleasure of watching the federal budget last night, and it only seems, Vince, like we were here not long ago, but 12 months have gone past, and here we are with another federal budget.
Yeah, time has flown, and yeah, it was a very exciting budget. Where we up last night watching it with a bit of popcorn, soft drinks, a few beers, but yeah, just the way the world is at the moment, everything's moving pretty quickly.
We're going to take you quickly through the points that will affect the majority of our client base. And here's some of the key headings that we'll cover off on. So there's a bit of change in the paid parental leave and childcare subsidy space. We've got some business tax and compliance to talk about. And then I'll hand over to Vince, who will cover off on social security and superannuation. So let's just not waste time and get into it. As far as budgets go, and I'm sure you'll attest to this, Vince, there wasn't much action generally. So what does it mean? Personal tax, there's no real changes. So the big noise was around, would the Labor government continue with the proposed changes that the Liberals brought in, and those specifically being personal tax cuts that are due to come in 1st of July 2024. So in short, they did keep those proposed changes at this stage, but for now, no changes. The other points there to talk about are income tax compliance, and this goes for both individuals and business. There's a focus on tax compliance and a lot of money being thrown at the tax office to be able to recover overdue tax and chase people who either haven't lodged or potentially think they might be not disclosing all their income or claiming things they shouldn't. So I guess it's just a general warning, just to be aware of your risks, and when you're talking to us as your accountant, we need to make sure we're lodging something that's going to keep you out of trouble. The other two there aren't tax related as such, but their paid parental leave is going to be raised up to 26 weeks. So that's the headline, but the fine print tells you that it's over 3 years. So 20 weeks currently, in 12 months time, it'll jump to 22, then 24, and then 26. It takes 3 years to get to that 26 weeks or 6 months. And childcare subsidy. So most people with children in childcare will receive an increased benefit, and for those with their first child in childcare, the benefit's now up to 90% of the childcare fee. So that'll be pleasing to parents and be able to keep them in the workplace. For business, there's probably even less that are affecting small business as far as the changes, and that warning there just about the ATO compliance, and we're seeing the tax office ramp up now. They've sort of given everyone a bit of relief through the COVID period. The activity is ramping up. So 200 million a year, they've said, for the ATO avoidance task force. And just, again, those points I raised about declaring what you need to and making sure you're up to date. We are seeing them issue fines and be a lot more aggressive. And for the business tax side of things, the main changes are really affecting the big multinationals or large businesses. So they're going after those businesses that might potentially have tax havens in other countries, or those big multi-million-dollar businesses that get away with paying a small amount of tax. That's really the focus. So for small business, there was very little mention or change. Vince, what are the changes in this space?
So it looked like the budget was targeting and providing some incentives to some of our retirees, other Australians, and trying to use obviously some of these incentives to fix some of the problems in the economy. So the first change they've got is, previously a retiree and age pensioner who had sold their principal residence had 12 months exemption from an asset from the sale proceeds of their principal residence. So if a client had money sitting in a bank account from a sale of their house, and they still didn't know what they were going to do, like relocate, you had an exemption of 12 months from an asset test. That's extended to 24 months. So giving the retirees some more time about, are they going to relocate? Are they going to put some of that money into super? So that's been extended from 12 to 24 months. The other one is also, which this was spoken about a month or so ago, was retirees who, some retirees want to get back into the workforce part-time, but don't want to lose part of their pension. So as we know, Anthony, there's a skills shortage across the nation. So what this incentive is, okay, previously you could earn 7,800 as income. And then once you earn above that, your age pension entitlement would reduce. They're increasing that from 7,800 to 11,800. So we have a number of clients that work part-time, and this will probably allow them to increase their hours. So giving some incentives to the retirees, but also fixing that, or hoping to assist, I suppose, in that skilled shortage space that we're all facing. So I thought that was a really promising measure. The increase to the senior healthcare card. So this is for a lot of our clients who don't, or self-funded retiree clients who don't qualify for a healthcare card. So previously, you would, for a single, you could have taxable income up to 61,000. That's increased. So once you got above that level, you wouldn't qualify for a senior healthcare card. That's gone up to $98,000. To $90,000. And for couples, it was 98,000, and that's now gone up to 144,000. So that's a big lift in the amount of income that you're able to receive, and now you're able to qualify for a senior healthcare card. And the senior healthcare card does provide some benefits, not the same as the healthcare card, but it will provide some benefits to those older self-funded retirees. So speak to us if you believe that you do qualify for that measure. And also the other one was, deeming rates. There's a freeze on deeming rates. So when obviously Centrelink assess your eligibility to qualify for an age pension, they deem your investments. That rate's going to be deemed, that's going to be frozen for the next couple of years. So that's another tick. So that's a positive as well. The super, again, bit of incentive to, I suppose approaching that retirement age. So previously you could sell your property, your principal residence, and put or contribute some of that money into super, up to $300,000 each into super. Now they've dropped that age from age 60 to age 55. The main reason here is a lot of sort of potential pre-retirees and retirees. The houses are too big. There's a shortage again of housing and land. So they're trying to just free up some of that, I suppose, residential property in the country, that shortage. So selling for the retirees and hopefully for the young accumulators to acquire those properties. So that's also, I think, a pretty good measure as well.
Look, Vince, I guess the good news is a bit of stability in that, okay, there hasn't been a huge number of changes, but it's probably what a lot of people need at this point. And we've had a volatile couple of years, and obviously our local community has been quite flood affected over the last few weeks as well. So the next 12 months or so won't be without their challenges, of course, but I think that it's probably good news there's not too many changes. And those social security and superannuation changes do, especially for our older Australians, provide some more opportunity. So I guess then it's a matter of if you think that any of these changes affect you, or you want to talk about them in some more detail. That's a brief overview, but we've obviously got all the fine print with us. Please contact your MB+M advisor. Anything more to add, Vince?
No, just like you mentioned earlier, it's been a tough time, I suppose, in the community the last 2 weeks. So we wish everyone, some prosperous times in the future, but hopefully everyone's safe. And it was great that the community in the greater region banded together, especially probably more so for the Marupna area. So that was fantastic to see that what a community can do in time of need. So that's all I have.
Thanks, Vince. Thanks everyone for tuning in. Stay safe, and we'll see you again soon.